Welcome back. Let's get a quick look at how the markets have fared then. Starting off in the Far East, Asian stocks retreated from what were 6-month highs this morning as conflicting signals from China and the United States on progress made in the trade talks deflated market hopes of a near-term truce to end what was their damaging tariff war. The moves contrast with Thursday's surge of optimism in global markets on news that Beijing and China have agreed to roll back the tariffs on each other's goods as a part of the first phase of a trade deal. Now, Tokyo's Nikkei, which earlier in the day climbed to 13-month highs, gave up some of the gains to be up 0.26%. Chinese shares also reversed course from earlier gains, with the composite down around 0.5% as well today. Hong Kong's Hang Seng has slipped 0.7%. Now, the Dow Jones and S&P 500 notched record closing highs on Thursday as the latest signs of progress in U.S.-China trade relations relieved investors. But a report raising fresh worries about the outlook for a deal limited the day's gains. China said it had agreed with the United States to remove tariffs in phases, while state-owned Xinhua news agency said Beijing was also considering removing restrictions on poultry imports. But indices paired those gains in afternoon trading after a Reuters report citing sources said the White House's plan to roll back China's tariffs faces internal opposition, that no final decision has yet been made. An interim U.S.-China trade deal is expected to include the U.S.'s pledge to scrap tariffs scheduled for December 15. Dow Jones Industrial 0.33% better off, while the S&P 500 gained 0.25%, the Nasdaq adding 0.25% as well. Well, a quick look at how the general markets are faring as well. We kick things off as well out in Europe, and we particularly head off onto that front then. And we start things off with the likes of the FTSE, the CAC and the DAX out in Germany. Of course, sentiment here would have certainly stemmed out of that US-China trade situation and where things fare on that front. It certainly has been an interesting row. So positivity perhaps seeping through onto that market. So the European markets have certainly done a little bit well, and hopefully we can get a little bit of a sense of exactly where the markets are sitting right now, and that is your European market picture. Only the FTSE 100 out in London is sitting in positive territory. The DAX and the CAC 40 out in negative market territory this afternoon. Headed off onto the all share then, some negativity today, having seen a slight sense of negativity as well yesterday, perhaps calming down, should I say, is what the markets have been doing of late. Industrials doing a little bit worse for wear as well, while the financials not necessarily gaining too well. Well, yesterday's biggest losers were the gold miners, and those seem to be headed lower as well today. So another bad day. Overall resources down around 0.5% yesterday, and today continuing a similar sentiment, of course, with the platinum shares also going lower. Over to your commodities picture then as well. As you'll tell, gold not sitting as above, should I say, that $1,500 fine ounce mark. So certainly important there. And so too platinum having dipped below that $900 a fine ounce mark there too. $61.35 a barrel for Brent crude, dipping a little bit as well from this morning's numbers of beyond $62 a barrel. Let's remember, of course, that demand concerns have certainly filtered through into the market. And just what happens with the China-US trade deal will certainly change where demand goes as well. It's actually been a better picture for South Africa's currency of late. 14.66 against the US dollar is certainly better than the 15.04 we saw after that medium-term budget policy statement last week. So a week on, and we're looking much better again. 14.66, 18.97 for a pound, 16.34 then for a euro. Now, here's a story that has certainly captured the realm and certainly captured the market, and it's one that perhaps we should look onto. Just yesterday, we saw the CEO of Capitec being announced as the Business Leader of the Year, and that has certainly meant that Capitec does look good in the context of where it's grown over the last number of years in terms of growing the number of operations as well across the country. The CEO looking to expand that business as much as possible. 1,440 Rand a share means that they have worked really hard. But here's a saga that may indeed help hurt the company. State capture seems to have landed on the door of Capitec in a difficult way. Let's begin by explaining exactly what's happened. Regiments is a company that owns 59% of a company called Ashbrook Investments, and Regiments then is, of course, a Gupta-linked company, but we'll talk about that in a second. Ashbrook Investments, in turn, owns 100% of a company called Coral Lagoon Investments. Now, this is a company that we're going to be focusing on quite a bit with Regiments. Now, what has happened as well, if we cross on over to the next slide, then you will certainly see that Regiments itself, which is a Gupta-linked company with, of course, an associate called Salim Essa, has lost money to the Transnet pension fund, or money that was owed to the Transnet pension fund, which has certainly hurt the entire situation on that front. So Transnet's pension fund then goes to court ultimately to try and get that money back. So we head on over to the next slide, and you'll find then that what has happened is that the High Court in Johannesburg has ordered Regiments to pay back 500 million rand to that Transnet pension fund. But unfortunately, because of state capture, Regiments does not have the money to pay it all back. So what does Regiments do? If you head on over to the next slide, you'll find that Regiments says, well, the company we own as an affiliate. Remember the initial slide, 59%, where Ashbrook Investments owns 100% of that entity. Well, Coral Lagoon, as that company, owns 810,230 shares in Capitec, meaning that that value is 1.12 billion rand. This is, of course, a price level as before trading this morning. Now, what that means is that if they were to sell off all of those shares, it would give them 1.12 billion rand. But at this point in time, that would mean that Coral Lagoon only gets 688 million rand. Let's remember, of course, that Coral Lagoon is, or should I say, Regiments would get 688 million rand because Regiments owns 59% of Ashbrook Investments, and that is who owns 100% of Coral Lagoon. So instead, however, Capitec says no. So we head on over to the next slide, and this is actually how the money goes. So the High Court gives Capitec 2 days to give permission to Coral Lagoon to be able to sell all 810,230 shares. The Capitec has, however, appealed that decision by the High Court and says that because Coral Lagoon, which is a 100% black-owned entity, they're trying to protect their triple BEE status, so they've declined and said, no, we would like to rather have you put out 415,000 shares and not the full complement, because that would hurt the business. Certainly an interesting picture, one that we'll continue to look out for and see exactly what happens from here on in and see where the Capitec story goes. Let's unpack this story then just a little bit more as well and get some thoughts then as well. My colleague as well is joining me, Warwick Lucas from Galileo Capital, joining us here at the Auckland Park Studios. Warwick, thank you so much for the time. That story tells you everything. It's just crazy, isn't it? Yeah, it's certainly a little bit untidy, and I guess it speaks to some loose ends that weren't completely thought through, I guess. I would have thought on one approach to take would be something like a so-called break fee. In other words, if they say, right, well, there's the cost associated with putting the empowerment structure in place and so on, maybe some discount or funding mechanism or whatever. Sure. Then if the conditions of sale weren't met, then there needs to be some kind of break fee associated with it, which they can then litigate for as a way of closing this loop. Now, clearly there's not some clean way of closing the loop, and hence the sort of desperate fighting that we're seeing here. But in all honesty, I really wonder if that Regiments Capital is really the kind of BE partner they would really want. Yeah, I mean, exactly. To try and protect your BE status, would you not in a time like this want to rather just find somebody else, take a clean break if possible? This is the best possible way to do it. Yes. The impact, however, is the one that I will question on the share price and on the entity. How much of a big impact is 810,000 shares out of the millions that Capitec actually has, and what does it do to that share price? Well, my knee-jerk thought would be that the market can probably digest that amount of shares. So I am a little betwixt and between, but the company clearly feels thoroughly aggrieved. So I guess perhaps we need to hear more clearly from them why they feel they have been damaged. Yeah, I mean, they haven't put out exactly their primary reason for appealing their decision, but certainly the BEE status is one that seems to be making the headline at this point in time. Warwick, this is not the only piece of news. Of course, China and the United States, that trade deal coming to the fore. They are now officially saying they have a phase 1 trade deal in place, but they just need to find a venue to sign it.
Okay. Well, I think that goes to speak how tenuous it still is. I think the area of the market that sort of seems very relieved is the gold price by falling away like that. But we're not seeing the kind of traction elsewhere that we would like to see coming through. For example, stronger commodity prices and equity prices. So clearly a little bit of cloudiness there. I think really what we can take away from it is not that we have a deal per se, but we have a process of de-escalation going on here,
yes,
which ultimately still has to go to, shall we say, be rubber stamped by both presidents. We've actually got to hear Presidents Trump and Xi say, yes, there is a deal.
Yeah, and that will be probably the only way to, give the market some sort of breather and some sort of help as well. Then, in another story then as well, we're getting the sense that Eskom continues to hurt South Africa. Yes, maybe load shedding today. There was load shedding yesterday. But we're also finding that other countries, Zimbabwe, Zambia, the likes as well, owe South Africa cumulatively 630 odd million rand.
Yeah, look, I mean, that in the overall context, I guess, of Eskom's debts and so on is not a particularly large number, but it speaks to an ongoing problem, namely that of Eskom continuing to sell power to people who won't pay for it, whether it is a problematic neighbouring country or a problematic council. And one can extrapolate that to say, well, Eskom's board, when it complains about political interference, has a point. I mean, if one is using Eskom to gain some kind of political gain, whether it is through foreign relations, whether it is vote buying, whatever, that clearly is a conflict of interest between a monopoly power producer and government, and that actually needs to be addressed on a comprehensive basis.
Yeah, certainly going to be interesting on that front. General market overview, you happy with where the market is right now? I mean, we've generally been up, I think, thus far this month particularly, and looks like we hit it higher this year.
A little bit better. I think the rand is a strong part of that. So I think most of it featuring in the big caps rather than the broad market. The broad market showing some signs of a really tough year still.
Sure. Warwick, appreciate the time. Thank you so much for coming through every Friday. Of course, get to chat to Warwick Lucas from Galileo Capital, who joins us here on Point. Well, up next, of course,